are going to look into the definition of environmental accounting. So, the definition that we have here is given by Alok Kumar Pramanik, and we see that environmental accounting is the process of recording and summarizing the value of environmental goods and services in monetary terms. You would quickly realize those two words, recording and summarizing, is similar to the definition of accounting itself. And we see that environmental accounting is this process of trying to understand the environmental impact and understanding it in monetary terms, because accounting is recording of transactions that happens in monetary terms. The definition goes on to say that it attempts to evaluate the impact of organizational activities on environmental resources. And that is another important part that we need to understand, that environmental accounting is related to understanding how the organization's activities are impacting uh, the environment. So we want to understand and evaluate our activities or what we are doing to the environment. There's another definition here, and this is a rather very common definition of environmental accounting. It says that environmental accounting is the identification, measurement, and reporting of environmental costs. Once again, you will see those words are very familiar, again, from the definition of accounting: identification, measurement, and reporting. And these three things are important as we go about studying what is environmental accounting. So we are identifying, measuring, and reporting environmental costs. Uh, now, the definition goes on to say the integration of these environmental costs into business decisions. So, whatever outcome that we prepare out of environmental accounting is to help business managers make the right decisions. And the definition goes on to say the subsequent communication of the information to a company's stakeholders. So let's view this definition a little more closely, and we will talk about these three parts, that is, to identify, measure, and report. Identify, measure, and report in the environmental accounting. So, first of all, we see that environmental accounting is to identify. It is the identification of a very large group of activities. We try to identify each and every activity of the business, the products that we make, how are we making it, what is the process uh, of making those products, what are the services that we are offering, what are the different activities that is going on in giving those services, and what is the impact of those activities on the natural environment. So, first in the environmental accounting is to identify what are the activities and how are these activities related to influencing the environment. The next part of the definition talks about measurement. What are we measuring? So, after we have identified what are the impacts on various stakeholders, remember, we are not only talking about impact on only the natural environment where people live in that community, but at each and every level, each and every stakeholder, what is the impact of our activities on those stakeholders? And so we measure those impacts in terms of costs and benefits. Uh, from our previous video, we learned that when we understand environmental accounting, we also need to understand the different types of costs. Uh, Costs such as implicit cost, which is the cost of manufacturing a product or cost of buying a particular product. But we are going beyond that cost to even talk about social costs. Social costs are costs borne by the society. people who are not directly related to our organization. They have nothing to do with buying our product, but yet they are impacted by our activity. So we want to measure those costs. And maybe why only talk about negative? Maybe there are some benefits that are also coming out from our economic activity. So we will want to measure those costs and benefits. And then we want to do this so that we can provide our management with a report that they will use in decision making. Now, how are we going to report it? This has to be done, our observation has to be done and converted into some sort of physical units, in some sort of numbers, or in terms of money. The third part of the definition talks about reporting. So we report whatever we have observed, and then we make these reports available to both internal and external decision makers. Now, the type of report that we are preparing will be different for different kinds of users. So, for the management, they would require a certain type of report which will help them in making decisions. At the same time, the government would ask a different type of report from us that would show what is the impact of our business activities on the natural environment. So, different groups require our report in terms of environmental impact.